Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand all the latest cues from the D Street, starting from the benchmark index moves, the sectoral indices and how are they performing in trade, and also the buzzing stocks in trade, which are the stocks that are buzzing the most, action-packed day so far, and also what can you expect going forward from here. Of course, the US Fed meeting and the decisions on rates, and that may actually set the next direction for the markets, and how should you be approaching the markets amid all this light as well. We'll be speaking to an expert to give you all that insight too. But first up, a quick check on how the markets are doing at this point. The Nifty hovering about 17,142 odd points, about 34 points higher in trade, 125 points of an uptick for the Sensex as well. So they're building onto the gains that were built yesterday. 58,199 currently for the Sensex, and both the indices are up by 0.2% higher in trade. Amid the other broader markets, when you talk about the mid and the small caps, both are actually supporting the market moves on the benchmarks, with the small caps leading the pack with 0.8% of an upside today. India VIX has also cooled off more, about 1.7% downtick can be seen, so it's slipped below the 15-odd mark. So that's also comfortable right now. The market breadth indicating slight tilt towards the advances, with 28 stocks in the green to 22 stocks declining as far as the Nifty 50 stocks are concerned. Amid the major gainers, you do have Bajaj Twins really leading the pack today, about 3% uptick for both of these stocks, Bajaj Finserv and Bajaj Finance. Apart from this, you have the life insurance majors, HDFC Life, SBI Life also inching higher by 2% odd, and Hindalco, of course, is moving higher by 1.5%. On the other side, you do have BPCL seeing some profits being taken off the table, 1.7% cut for that one. Coal India down by 1%, Cipla, Apollo Hospitals and NTPC, the other laggards at this point in time. In terms of the sectors as well, if you see, we do have all the sectors of the Nifty up in the green today, led by movement in the PSU banks especially, which is 1.3% up in trade today. That's leading the pack, and apart from this, 0.5% increase can actually be seen on the pharma indices as well. Also, the royalty pack up by 0.5%, autos moving up higher too, not very substantial, but even IT, FMCG, all of them supporting the index moves at this point in time. But time now to welcome our guest on the show. Mr. Mayuresh Joshi joins in. He's the head of research at William O'Neill India. Welcome, Mr. Joshi, and thank you so much for taking the time out for this discussion. Overall, we've been seeing fresh worries really as an overhang for the markets of late, with the US financial crisis and then the Credit Suisse crisis also emerging. Your thoughts on how should investors be really looking at the markets? Of course, we will be looking at fresh triggers when tonight the US Fed really announces their decisions on the rates. Could it be a make or break day for the markets then?
Afternoon, Sakshi. I think pleasure to be on your show. Two things. One, as far as the Fed rates are concerned, I think a large part of the market consensus is pointing out to a 25 bips hike in the Fed rate, with more or less dovish commentary looking at the contagion risk that the US banks have run into. Having said that, if it's 25 bips and if the commentary is dovish, I think the markets might rally on the impact that significant rate hikes might not come through. The second element then the markets will focus through is how deep is the contagion risk spread across the entire banking and financial system. The Fed has probably come to the rescue at this point of time, and Janet Yellen has obviously mentioned that they will come forth to protect any uninsured investors as well. So to that extent, I think the markets will brace themselves if this comes true, for a significant short covering that will come through. And the Indian markets are no different, with the kind of shorts the FIs have in the system. If this turns out to be true, you can expect a counter-cyclical rally to probably come through. But whether that will sustain into a roaring bull rally again, I think it will all depend in terms of how earnings will probably play out. Earnings had been a little bit patchy as far as Q3 was concerned, and might remain a little bit sticky even as Q4 emanates. So to that extent, I think you might see a relief rally come through, but then you'll have to be very specific when it comes to sectors and stocks as far as earnings are concerned.
Sure, absolutely. Because in the light of the current financial crisis that we are witnessing and all eyes on US Fed, the focus right now, although, is on markets. But do you really think the markets would want to hear something about the systemic risk and what is really happening on the banks? Or is it more about inflation fighting and the impact on growth right now?
So I think it's more global in nature, Sakshi, at this point of time. If you probably look at the asset liability mismatch that a lot of the American and the European banks are facing, I think I was reading a few reports. I think the Indian banks, in the first place, if you look at the quality of deposits,
Sure.
and when you probably look at the quality of loans given as well, around 60% or more of the funding probably comes through in terms of retail households, where people like to keep their deposits in terms of time deposits rather than invest in GSECs. On the
Right.
asset side, obviously, I think as far as the HTM is concerned, when you're probably looking at the overall base in terms of GSECs, I don't believe it's a significant portion at this point of time compared to the global scale and standards as well. So, from a systemic risk as far as the Indian banks are concerned, I think we are pretty well shielded and guarded. I think it's more global that is causing the sentimental risk for the banking system worldwide.
Sure. But have the recession risks really intensified due to this crisis?
So, to a certain extent, yes and no, because I think if the Fed probably decides to calibrate their rate hikes and probably have the lag effect of the existing rate hikes work, uh, you might see a soft landing happening, assuming that there are no further contagion risks emerging from the banking system as a whole. If it turns out to be the other way around, where the Fed probably needs to have emergency lines opened up, as a case in point, they had withdrawn in terms of quantitative tightening, Sakshi, almost $600 billion odd dollars, and they've found back almost half that amount in a matter of a few days. So I think that risk in terms of liquidity and how the inflationary factors will turn out, and whether it's a soft or a hard landing for the US markets will be seen. But generally, I think Indian markets are better off at this point of time. And therefore, I think if it's a soft landing, I think the markets will take that in their stride. And as earnings start to bottom out in the next quarter or two, and since markets look forward for the next 4 to 6 quarters,
Sure.
I think the next quarter or two can be a game changer or a turn for the markets.
Right, absolutely. Now, you did mention that, our Indian banking system is a sound, much more fundamentally strong, and we have our own strong fundamentals, and that may not be as impacted with this banking crisis that's emerging on the global front. But, more and more concerns are emerging on how this banking crisis could really impact the Indian IT sector, and how that may be more vulnerable to this crisis, much more than anticipated ripple impact on the banking sector. And that is because 40% of the revenues of the industry really come from the BFSI segment. Now, what could this really mean for the earnings of the IT sector going forward from here? Do you really expect a sharper hit on the revenues going forward?
So if you probably take the earnings over the next 4 quarters and spread it even further over the next 8 quarters, if the impact in terms of the banking contagion carries on and lingers further, a lot of revenues for IT companies coming through the BFSI sector ranges anywhere between 30 to 60 odd percent. And therefore, I think a majority chunk of the revenues will be dependent in terms of how further order flows will come through, which can get muted because of this contagion risk. The other element, as we were just discussing, Sakshi, in terms of whether it's a soft or a hard landing as far as
Sure.
recession is concerned. The other sectors which are obviously dependent on banking for their funding needs,
Yeah.
whether it's manufacturing, whether it's retail, if this comes under some element of concern, I think it will only happen to the well-rated manufacturing or retail units out there. And therefore, I think the credit flow might just be very, very selective, which might also hamper the output for IT companies as well. Europe has been a soft patch for IT companies in general.
Yeah.
And therefore, I think IT companies might go through a phase where things might start coming off a tad bit. And therefore, I think our view on the sector as a whole, whether it's large caps or mid caps, is quite neutral at this point of time. I think Q4 will be a deciding factor for the sector.
Yeah. Is it possible for you to quantify the kind of hit that we can face on the revenues on the Indian IT players in Q4, for example?
So if you look in general, I think, as I said, 30 to 40% from BFSI, if you're probably looking at
Yeah.
10, 15% from manufacturing. The kind of order wins have been pretty decent so far. So there can be a hit of mid-single digits when it comes to a constant currency growth for the players as a whole. But as I said, it seems to be seen how Q4 will
Sure.
be delivered.
Sure. But can this impact from BFSI for the IT sector also spill over to the other segments, say, for example, the retail or the high tech as well?
No, it's absolutely a possibility. And again, for the IT sector as a whole, Sakshi, I think the margins will be very, very stable because wage hikes and attrition issues are behind them. So I think margins will be good. I think it's how they can manage the revenue growth. Coming to the other part of the question in terms of the other rate sensitives as well. Obviously, I think if you're talking about real estate as a pack, I think a lot of the mortgage, I mean, anybody who's taking loans, right? Mortgages will be at a higher cost at this point of time. And therefore, I think with interest rates expected to stay elevated, the kind of
Yeah.
EMIs that you probably need to shell out will make all these fence sitters probably delay their purchases as well. We've already seen that in terms of inventory stacking up for listed players. And therefore, I think real estate as a space might come under some element of stagnation
Yeah.
in the next couple of quarters. So I think rate sensitives and specifically the high rate sensitives, which is the high ticket areas, might come under some element of stagnation as we speak.
Right. Also, Mr. Joshi, if you could help us understand, what do investors do with the fresh cash available with them? Is it better to keep some gunpowder dry at this point in time, wait for the dust to settle to deploy your money? Or are there still some sectors or some safe spots where you can actually deploy your money right now?
So on the only lens, I think a lot of markets are coming under a lot of stress, and there will be significant amount of earnings downgrades. So even in the Asian pack, we are probably looking at the Korean and the Japanese markets coming under a lot of stress at this point of time, followed by a lot of European markets as well. Having said that, for our own context, you're absolutely right. I think having cash on hand, as we are suggesting at this point of time to our clients, is extremely paramount because there will be opportunities that will come through in the next few weeks as we come out and we gestate all the bad news on the macro and the micro front as well. Pockets of strength as far as earning stability is concerned, our own census and analysis for sectoral composition is suggesting capital goods still remains a very, very strong area. Infrastructure as a space where order wins, order flows, margin improvement because of better execution and operating leverage can play out very well. Selective power stocks, pre-heat wave that we've probably seen, and that is expected to continue because of El Nino if it does come through and continue for the next couple of quarters to stay these. And cement can be one sector that can actually uh, uh, be a kind of a surprise as far as Q4 is concerned. They can actually deliver a better set of numbers, in our opinion, as far as Q4 is concerned.
Okay. And what about diversifying beyond equities and, looking at other asset classes? For example, gold, that is seeming to be unstoppable right now, 8%, of an uptick this year so far, and it has outperformed all the other asset classes. Is it wise enough to chase the momentum in the other asset classes right now?
So I think diversification is obviously one thing which is extremely critical in terms of your asset allocation. And therefore, having some part of your allocations in gold through a systemic plan, gold bees is the best option in terms of both getting into the asset class over a periodicity of time and having a lower impact cost can be considered. So yes, I think some diversification in gold is warranted
Okay.
as a hedge in the risk on assets.
Okay, understood that. Let's also focus on some of the stocks that are actually doing very well in this kind of a volatile market as well. There are individual stocks that are doing well on several brokerage house reports too, and some individual news flows as well. So let me take them one by one because there's some sharp momentum today. For example, we've seen Sula Vineyards, which is a recently listed stock, that's up 9% today, and that's on the basis of CLSA initiating a coverage with buy rating. Any thoughts on this stock? Has this been an interesting, watch for you from the time the IPO came out?
So I think by the way the markets are moving and the volatility that persists, I think a lot of wine and liquor stocks might come back in focus.
Yes.
But it's apart, I think I think the numbers have been reasonably good for Sula in the quarter gone by. The top line growth, volume growth was very good. They had an expansion in their margin profile as well, and the management sounded very, very optimistic in terms of delivery of the numbers as far as volumes is concerned. With wine tourism expected to pick up and the holiday season expected to continue over the next few quarters, the kind of capex that they're probably doing in terms of the wine tourism aspect and the utilization level as well, the momentum can very well continue if they deliver.
All right. Another stock that's on the watch list and radar today is Hindustan Zinc, which has surged 5% on announcing a liberal interim dividend right there, 11,000 odd crore rupees. How do you, look at the stock amid this news flow, and what should investors do?
Fabulous announcement as far as dividend is concerned, but I've got a couple of concerns which gives me a typical catch-22 situation for
Okay.
Hindustan Zinc. Most of their cash reserves are now depleted.
Hmm.
The commodity cycle is not in a great shape at this point of time. You've seen China cut production. The demand slowdown globally is very, very obvious, reflected through LME prices, both for ferrous and non-ferrous. Zinc
Hmm.
prices for Hindustan Zinc in particular, lead prices, copper prices are at an all-time low level at this point as we speak. And
Hmm.
therefore, coming out of this cycle might take time. So fundamentally and structurally, to build on their cash reserves is going to take a whole host of time as far as Zinc is concerned. And because they've depleted their cash reserves, I think the repetition of such dividend in the next year seems
Yeah.
very, very doubtful. So again, good dividend announcement, sentimentally positive for the stock, positive for the shareholders so far. What happens in the next year or two seems to be very, very skeptical at this point of time, looking at their balance sheet items.
Okay, another stock that is zoomed about 18% today is VST Tillers, and that's on achieving 5 lakh production milestone at the Malur unit as well. I mean, like, the overall power tiller industry in India is around 60,000 units, and it's expected to grow at around 100,000 units by the end of the year 2025, and that's what VST Tillers has said. So positive news flow coming in there too. As a stock, do you track this at all?
So positive news, but again, I think one must understand, Sakshi, that tillers as a space is a very, very price-sensitive area. If you probably look at the hectares and the spread in terms of land ownership, less than 1 hectare, I think almost 75% of the population. And if
Hmm.
there is an El Nino, again, I'm mentioning this time and again, and if
Sure.
there is adverse weather conditions, I think the offtake of the sales thereof might start coming off. Specifically for this very, very price sensitive segment. So very good news in terms of deliveries so far.
Hmm.
But everything now depends in terms of the weather, and therefore the weather vagaries can actually have a say in terms of how the volume growth can happen.
Okay, and one more stock that we'll discuss before we wrap up the show, and that's Sonata Software. We've been talking about the impact of the financial crisis on the Indian IT sector and the anticipated impact on the upcoming earnings as well. And perhaps there has been a fear that, some of the orders will slow down for them because of this crisis. But Sonata Software is in fact gained today on the back of the orders that it has received. In fact, it's the biggest order so far for the company, $160 million of an order that it has received. Your thoughts on this company, and, does it really give us the confidence that come what may, whatever the macro situation, some of the companies in this sector also are a good boy?
So there will be outliers in every sector, Sakshi, and therefore I think Sonata, take a case in point, KPIT as well. The order wins that they've got are fabulous in this environment as well, and that gives a significant amount of revenue visibility as far as execution of those orders are concerned. Now they've been very, very prudent in terms of their margin performance as well, and with the other elements like attrition, wage hikes coming off, I think for the sector as a whole, margin tailwinds will definitely play off. My only concern is that the run-up has been quite significant for both these
Yeah,
stocks in general.
yeah.
Valuations have also started peaking off, and therefore I think corrections would be the way to look at these stocks. On the only lens, they're also at late stage basis, which ideally mean that if they correct and form a base after they correct, I think that would be an ideal buy point. Now looking stretched both on valuations and in terms of price action.
All right, then. Well, thank you so much, Mr. Joshi, for being with us on the show and discussing with us so many sectors and stocks that we've discussed today on the back of news flows, and overall the macros as well, and how they are likely to impact the direction of the markets going forward. We'll keep touching base with you to understand more about the insights on the markets going forward too. But right now, as we speak, 114 points up for the Sensex, 58,190. The momentum is still building on, but we'll have to see whether this sustains towards the closing of the day as well, because remember, we will be looking at the US Fed decisions tonight, and ahead of it, we'll have to see whether the markets can continue to build on these gains. And Nifty also hovering 29 odd points higher. We'll keep a tab on how the markets are moving in trade, and for that, you should also stick with us on Business Today TV. Don't forget to subscribe to this channel, and also continue to engage with us on our other social media platforms as well, where we continue to give you all the other news flows as well on the buzzing stocks too. Many thanks for tuning in. Until then.